show, Tech Check, for a long time now. So I'm so glad that we can do this live stream. And ironically, you have an announcement this morning too about your own show. I know I've been following the Best Business Show on social media for a few weeks now, and you have had an overwhelmingly great response, but it's becoming more official, I guess. You teased it this morning in Major FinTech. So tell us the details.
Yeah, look, we started the Best Business Show mainly because we think that the lack of financial education in this country should be a national emergency. If you go and you look at everything from $1.5 trillion of student debt, and you start to actually unpack the way people think about money versus what the real reality is, it's quite concerning. And so if you asked Americans, how many millionaires ended up actually inheriting their wealth, over 70% of Americans will say that it was all through inheritance. But when you actually unpack the details, 80% of millionaires inherited $0, and 33% of millionaires never made more than $100,000 in a single year. And so what you find is, a third of millionaires ended up actually just having kind of easy, timeless financial principles to follow, and could build a life of financial security and freedom. And we think that there's a huge hole in the market to help people understand this, especially with the backdrop of a macro environment where dollars are being devalued at a historic rate. And so we started the show with my brothers and I, mainly as a way to build a show that we wish that we had when we learned about business, investing, and finance. And so in kind of pursuit of that, we think that the CNBCs of the world and other cable networks do a fantastic job of educating kind of Wall Street, or people who already understand finance, understand investing, kind of are the sophisticated end of the market. But there's still 45% of Americans that don't hold a single investment. They don't even understand how money works. They don't understand why they should invest. And so that's really kind of what we're trying to solve for. And in the first 2 weeks, it's been pretty insane to see the response. We've had over 124,000 hours of content watched in 2 weeks. That's the equivalent of if you sat down today and started watching, you'd have to watch for 14 years before you consumed more content than people have consumed in the last 2 weeks from us. And so we think that there's just this very, very big, kind of appetite for this type of content.
Yeah, Anthony, it's funny, you talk about your brothers you're doing this show with. I have 3 brothers. My oldest brother is a hedge fund manager, and my 2 younger brothers got a little bit of inheritance. So they're part of this new retail cohort. And when I broadcast or report on stories, I get both of their opinions, right? The hedge fund opinion is as important as that new retail investor. And something really amazing happened last year. We had this debate on our family, text chat. You got to be diversified. But my younger brother said, no. We really believe in Tesla. We like this story. We're basically stock picking, right? And luckily they held on. They're not doing short-term trading. And this is something that we grapple with, certainly at CNBC as well, when we do have a new cohort coming on that, you're right, doesn't necessarily know financial markets. But one of the things I personally struggle with is, how do you do you encourage long-term investing, or do you let people make their own decisions? Because this is something that Robinhood, for example, right, in their roadshow, they said that they want to potentially introduce IRAs, Roth IRAs. So how do you focus on that, especially when you have an internet show that is, looking at markets and assets in real time to encourage sort of learning and not leveraged or quick trading that can sometimes lead to a lot of losses? And gains, to be fair.
I think a huge piece of this is people just don't know, right? And so really the impetus for this show was the fact that young people have never been more interested in financial markets and business and investing. And it felt like there's a lot of incumbents on Wall Street. They're almost mocking and ridiculing these folks. Literally, we would hear things like, they'll learn their lesson. They have to lose money to learn the lesson. And we just don't agree with that. We think that you can actually take that energy and that kind of newfound interest and redirect it to, kind of core financial principles. And really, that's why when we went out looking for a partner here, we understood that content's only one piece of this. We really needed some sort of software product that could take the information that we were sharing with folks and we could help put it into practice, right? It's one thing if you know the information, but it's another thing if you're actually able to put it in practice. And so that's why we partner with Sofi. We think that the Sofi platform is really interesting. Most people know that we're obviously very bullish on Bitcoin and that industry. But when you're thinking about kind of financial health and financial education, it has to be across the board, right? And what SoFi I think is so unique is they allow for budgeting and saving. They are helping people get out of their student loan debt. They're helping people in terms of investing, not just in Bitcoin or cryptocurrencies, but also in the stock market and ETFs, et cetera. And so when you look at it holistically, there's just very few kind of super apps, if you will, in the finance sector. SoFi, we think, has the best one, the most compelling offering. And so we're really excited to work with them. And we think that we're going to be able to help people not only figure out how to invest, but also just how do you spend less than you make, right? How do you get out of debt? These core principles that you can't even learn to invest until you figure out how to put yourself in a position where you're basically back to the starting line. So this platform is really unique for that.
Think about the environment they're coming into as well. I mean, when I was learning about financial markets, there was the smart money and the dumb money, and how simplistic is that to boil it down to something. And I gave you the example of my brothers, right? One actually turned out to be smart, at least in the shorter term. So a lot of this stuff still has to be written. I hope that, Pomp, we can do more crossovers, because I think your show is on at the same time as our show. So maybe you can have the best business show TechCheck on, streaming it at the same time. We'll figure out a way to somehow do this, but
when we named the show, I was looking forward to eventually the press was going to have to call it the best business show, which I told you before we started streaming that there's this element of like understanding the internet and understanding a balance between the seriousness but also kind of the trolling. And I think that's really the beauty here, is that the mainstream media is going to have to start coming more to the platforms where these individuals are. But also I think that there's a lot of individuals that'll start out, they'll learn on the internet, and then they'll eventually become sophisticated enough, and then they'll be able to watch kind of the more mainstream press and understand more of the nuances of finance. But I think that they're very complementary in that sense.
Yeah, it's a big market. So I hear your point and appreciate it. Anthony, while we have you, we got to talk a little bit of crypto. There's been so many headlines just over the last, 24 hours. Let's start with Bitcoin and Ethereum and some of the others. We've just seen this massive spike it started last night. What do you attribute that to?
Yeah, I mean, look, it's always kind of three things that feed into the price. There's always sentiment. There's always kind of news catalyst. And then there's what I'll just call the on-chain metrics. And neither one of them are exclusively causating or the cause of a price move. A lot of times they're intertwined. And so where we have been over the last couple of weeks is a pretty negative sentiment. If you look on the various platforms or kind of, news headlines. If you look at catalysts, there haven't really been any. If anything, there's been some concern, various people tweeting or different types of news, regulatory actions, et cetera. But the on-chain metrics have been very clear over the last 3 weeks or 3 months or so. And what they've shown is that new inexperienced participants in the market, whether they're whales or smaller investors, have been selling Bitcoin to experience strong hands. And so whenever you see that, what you can, kind of take away from it is that these experienced strong hands, they're not selling. Right. I think it's like over 90% of Bitcoin hasn't moved in the last 12 months. And the reason is because people have been around for a long time. They know what happens here when there's a constricting supply and supply is becoming more and more illiquid. It usually leads to a US dollar exchange price that kind of explodes upwards over time. And I think that, last night we saw that start to happen in kind of a short squeeze type situation. But I think you're going to continue to see through the end of this year exactly what we've been saying since 2019, which is when you have a supply shock like that May 2020 having in Bitcoin, that is going to lead to a repricing of the asset. And the repricing isn't 100, 200% higher. It's usually hundreds, if not thousands of percent higher. And I think that we're still kind of on track for that to happen.
Let's get to some headlines this morning centering around Tether. Bloomberg is reporting that Tether executives are set to face a criminal probe into bank fraud. I was going through your past comments. In 2017, you tweeted, you called Tether the biggest racket ever. Highly doubt that it's actually pegged 1-to-1. I had an rare mainstream media interview with two Tether executives last week, and there was a lot of stuff that they couldn't or wouldn't say. What do you make of the scrutiny, not just this morning, these headlines, but the increased scrutiny on Tether and its role in the crypto economy?
Yeah, I think when it comes to Tether and the reserves, everyone wants to run to judgment. But frankly, nobody has the answers, right? And I think we've got to be very careful in terms of taking comments from years ago when the situation may have been different. And I've publicly come out and said, look, I'm sure at some point it wasn't backed 1-to-1. I think even Tether said that, but now it is backed 1-to-1. And frankly, I think that ultimately the referee here, or the judge, in terms of value and kind of sustainability and resilience in the market, is going to be the market. And so while a lot of people like to pontificate on Twitter, myself included, in terms of what we think is the answer or what we think is going to happen, ultimately our opinions don't matter. The market's going to decide. And so if the market wants regulated kind of insurance in terms of it being backed 1-to-1 with audits, and there's players in the market who do that, then that's where value will flow. If the market doesn't want that, then market will flow elsewhere. And so let's just wait to see what the market kind of decides is kind of that resilient kind of value accrual. But it's also clear that there's many, many different stablecoins to choose from, right? At the same time that Tether is tens of billions of dollars in size, there's also now things like USDC that have tens of billions of dollars in size as well. And so I think, it is a very different story today than it was years ago. And the market ultimately will be that referee.
That sounds similar to the argument that the executives made last week. But I just wonder, they've grown so much this year, it is different than a few years ago. They're now $63 billion worth of tethers in circulation. Do you think that there's an increasing responsibility, especially as people like Fed President Rosengren, Janet Yellen, Jay Powell ask for more transparency? And like I said, they just can't give us anything. They can't even tell us where the commercial paper's from. Is the market not changing? I mean, just because the market votes on something, and historically we know that the market has been very wrong, and it's up to people like us, right, who are running business shows to explain that and perhaps get more transparency.
Yeah, I mean, look, again, I think that the legacy system will yell transparency, but what they find is that the Bitcoin, crypto, stablecoin world is exponentially more transparent than they are, right? You can't even tell me how many dollars are created today, yet we know exactly how many Tether are printed or any other stable coin is printed. And so I think that transparency calls from the legacy system are kind of comical, given just the difference in structure. Along with that, my understanding is take a USDC, right, which is, I believe, the fastest growing kind of stable coin. They now are 25 billion plus in market cap. And so I don't think that this is a situation where Tether is the only player. And again, that's where I always kind of go back to, if folks had concerns around Tether and it was the only player, I think that would be a cause for concern and kind of banging on the table. But what we found is it's not like there's any secret in terms of the group of people who are concerned in the market. They're very vocal. They're actually more vocal than any of the supporters are. And so folks know what concerns are, and capital is continuing to flow to Tether and also to other stablecoins. And what you're seeing is this massive tailwind where people are going to choose kind of which provider they want to work with. But overall, the stablecoin market is growing at an incredible rate. And it's just a step function change in the technology for people who want that stable value. And so I think that it's easy to kind of guess in terms of what's going to happen in the future. It's easy to try to guess, kind of where we are today in the structure of some of this stuff. But again, the market is going to be that judge, and it's just a very transparent system. We can see exactly what is happening, and I think people should just pay attention to that. And over time, the market will kind of serve as that balancing machine.
Well, then let me ask you this, because the supporters of Tether, they love it for its ease of use, right? Its velocity and liquidity. And that is a very important role in the crypto economy. You can't really do that with fiat dollars or fiat currency. Do you think that regulation is important for stablecoins? Where do you stand on that just more broadly?
Well, take the whole sector, in totality. The crypto companies are more regulated than traditional financial firms. So for an example would be in the state of New York, which is considered the capital of finance globally. If you want to start a traditional financial company versus a crypto company, you have to get all the same licenses in terms of having to get the money transmitter licenses, do KYC, AML, et cetera, broker dealer license, all that. But then you have to get an extra license. So you actually have to go through more regulatory hoops to start a crypto company and serve users in the financial capital globally than you do if you want to start a traditional financial firm. And on top of that, if you are a user of these products, you are actually taxed more aggressively. So when you actually go to spend the asset, you are hit with a capital gains tax, whereas a currency, you are not. And so the narrative that this is unregulated or it's not transparent, frankly, is just a misplaced and miseducated view of the world, right? This entire industry is overregulated compared to the traditional system.
But if you take an example like stable coins, money market funds have a lot more transparency than they do. Tether and even some of the other ones just have pie charts saying this much in commercial paper, this much in cash and cash equivalents. There's no way that a traditional money market fund could get away with that.
But again, I think it goes back to, are they money market funds, right? The comparing any stable coin, mechanism or product to a money market fund. If they were money market funds, then they would be regulated that way. And maybe regulators in the future determine that they are. But as of right now, they haven't determined that. And so, I'm not here to kind of serve as the defender of any of these platforms. I think the way that I just view it is, if people do bad things in a market, regulators tend to find them, identify what they did, and punish them. If people are good actors and they follow the rules and they adapt to an ever-changing regulatory environment, then regulators tend to want them to build successful businesses, create jobs, bring innovation to the market. And so I think that, making these comparisons, I'm not a regulator, I'm not a lawyer. I frankly just say, look, the market is going to figure it out. And I think that I've spoken to enough of the regulators, everyone from, SEC Commissioner Hester Peirce to folks like Chris Giancarlo, the former CFTC chairman, et cetera. And what you find is many of these people believe in the underlying technologies. They believe in the opportunity set. They believe that innovation can kind of push us forward. They want that to happen here in the United States, but they also want to make sure people are protected. They want to make sure that rules are in place. And I think that, both the market participants plus also the regulators have a desire to collaborate and work together in order to kind of build an industry that serves both of those purposes.
Well, it's such a fascinating discussion. I hear what you're saying, let the free market speak. And I think the regulators are figuring this out. We have to keep in mind that this is still such a relatively new asset class. And a lot of this stuff is being figured out. Anthony, I'm so glad that we finally got the chance to chat. I look forward to more. I look forward to watching your show. And thank you so much for being with us.
Absolutely. And let's send everyone to sofi.com/pomp. They got a whole bunch of great stuff that is kind of in the works. And I think people will really enjoy it. So thanks so much for having me.
Absolutely. I will certainly be watching. Anthony, thank you so much. We'll talk to you soon.